Hey everyone, it's your girl, #JLoan. Happy Wednesday. It is super cold here in Texas. It's freezing here in Texas, at least for me, because I'm a Miami girl. So if you bring me to Texas and it gets cold, I'm still very, very cold. But today I wanted to bring a new video to you. Obviously, a couple days ago, we talked about whether refinancing was beneficial for you. But another question that I'm coming up with, and remember, I bring you all of these when I get asked these questions, because I feel as a client, if you call and ask me the information, I think everybody may want to know this information as well. So hello Jess, hey Carl, for you all that are watching currently. But today we're going to talk about whether or not you should buy down your rate, because that's also a question that comes in on whether or not I should buy down my rate. And then I get asked the question of whether they should buy down the rate. But again, this is a topic of whether you believe that it's beneficial for you to buy down your rate. So I wanted to talk to you a little bit about it and understand what that is. A lot of the times you're not asking to buy down your rates, but if you don't really understand your loan estimate when you get it, sometimes there's already a buy down in there and they're just selling you on the rate. So make sure that you understand what it is that you're reading, because like I said, I get a lot of quotes to match and they're charging them already a buy down in there. So let's talk about that buy down and what a buy down actually is, or a discount point, or however you want to hear it, okay? So typically there's rates that are in the market that come out every day, and sometimes they change multiple times a day depending on what the market is doing. So we have a base rate, and that's called a par rate. And a par rate means you're not paying for the rate, but we're also not giving you any credit towards your closing costs for that rate. It's just right there at the bottom. But there are rates below that rate, and there are rates above that rate. So the rates we're going to talk about today are the rates that are below par rates. So below par rates are what will cost you money. Those are your buy down, or that's your discount points that you will pay to get those rates. So how do you know if it's beneficial? So one, you got to see both side by side. You got to have a comparison to kind of see if it's worthwhile. So I did put an example on the board. These are hypothetical interest rates and a hypothetical loan scenario. But the question is, should I buy down my rate? So in this particular example, as I move over, the example is the purchase price is $250,000, but their loan amount is $200,000. So at their first scenario, once again, hypothetical rates, I'm just putting that out here, at 4.5% on a $200K loan, that would bring your monthly payment, just your principal and interest. I'm not talking about mortgage insurance, taxes, insurance, anything like that. Just your principal and interest is $1,013. But if you, and that's your par rate. Let's just say that's your par rate. Once again, hypothetical interest rate. I have to throw that out there. But let's just say you could also get a 3.5% because you could buy down your rate. That would now change your principal and interest to $898 that you would have to pay in principal and interest. So the difference between those two is $115 a month. So the first question I ask you is, what would saving $115 a month do for you? That's the first question, because you may be comfortable with the $1,013 principal and interest payment. So there's no need for you to save money. Or another question is, how long are you going to stay in the property? Because if you're looking to stay in your property, I say 5 years or less. Everyone will have their number, but 5 years or less, I don't think it's worth it for you to buy down your interest rate or pay an enormous amount of closing costs, because you're probably not going to make that money up in 5 years. That's just me personally. But let's just say you wanted to live in this home long term, 10 years, 15 years, 30 years. This may be beneficial for you to save $115 a month. But now we have to talk about not only the payment, but what would it cost you as a borrower to get that 3.5% interest rate? And then we're really going to see, is it beneficial? Okay, so let's say hypothetically, I have to use that word, that buying down to 3.5% costs 1%. Now, I can tell you it probably will cost more than that to jump down a whole point, but let's just say it only costs 1%. So 1% of the purchase price is $250,000. And so let's just say it costs $2,500 for you to buy down this rate. So how you would calculate it is you take the $2,500 and divide it by 115. That shows you that you would make up your cost of the buy down in 21.74 months. So basically 22 months and you would make up the cost of that buy down. So now we got to see, well, what if you stayed in this home for 30 years? What would be your true savings? So let's just round it up. 22 months it takes you to catch up what you just paid on a 30-year mortgage, which is 360 months. So that leaves you with 338 months left in that mortgage, and we multiply that times $115. Well, your total savings over the life of the loan, if you never make an extra payment, you would save $38,870 over the life of the loan by buying down your interest rate. So I tell you, would it be worth it if you were going to stay in this home long term to pay $2,500 to save $38,000? The question would absolutely be 100% who would want to pay $38,000 more in interest over the life of the loan. So that's how I look at whether you should buy down. But I also had a scenario that came up recently where the borrower didn't want to spend a certain amount of money at closing because they needed to do other things for the home. And you have to remember, when you buy a home, you got to furnish that home. You may need a new refrigerator. You may need to paint. There's things that you need to do. So if you exhaust all of the money in your account, you kind of have to wait to build that home. And there's nothing wrong with that. You could do it room by room. That's the joy of home ownership to me, is that you can buy an empty house and furnish that house month by month, and then you finally have a finished product, but it's yours, right? But so this particular client needed their cash to close because they told me that they needed to buy a refrigerator. And the cost of the buy down could pay for their refrigerator. So I said, well, what's more important to you? And obviously the cost wasn't saving $115 a month. It was saving like $40 a month. And so I was like, well, what does $40 mean to you? And how much do you need that refrigerator? Now, I don't know about you, but that's the first thing you need in a home, right? You need your refrigerator. So they were like, I need the refrigerator more. So the buy down didn't make sense for them, even though over the life of the loan, you would save $10,000. But you got to remember, this is if you never make an extra payment. So if you never make an extra payment, these numbers work fine. But the minute you add 25 cents or $1 or $100 to your mortgage to pay it down sooner, it changes all of the numbers. So hopefully this information is very helpful. This is about buying down your rate. The big point about all my videos is to educate you in knowing your options. You can always buy down your rate. There's never just one interest rate offered. You have the opportunity to have an increased interest rate, and that's how lenders can pay some, if not all, of your closing costs. It's not free. You are paying for it in the interest rate. So if you have your par rate and you go above it, we have to give you the credit associated with that rate, and that goes towards your closing costs. But if it's below it, you pay for that interest rate. So know when you're going into a home loan, whether it's refinance, purchase, construction, it doesn't matter. There are a ton of options of interest rates, and you should know your options. So me personally, for any loan officers that are watching this video, I personally always send, unless my borrowers are very specific, I always send my borrowers par rate, 1% of charge below par rate, and then I also show them an option of us paying for some, if not all, of their closing costs. So they have the vast array of rates and options for them. And then I also let them know, hey, there's rates in between these rates. So if you want to see any other options, just let me know. This well informs the clients of all of their options so that I, the loan officer, am not choosing your loan for you. You get to choose your own loan for what's best for you, your family, and your financials. So let's see who's in the building today watching the video. And if, of course, if you have any questions, feel free to ask me them. I'm happy to help. So Jess, I already said hi to you. Carl, Christopher Washington, Dan the Man, Michelle Stringer, Roderick, what's up? Jerome, what's up, buddy? Kristen Knotts, hello, Kelly, Bradley Burns, how are you? Reggie, Paul, hey, Paul, and then Winston, how are you? Those are my buddies on here. So, of course, I bring you these videos because I want you to do one thing for me, and I ask it on every video. Please like and please share the video. Don't just watch it, because if it's helpful for you, if it's educational for you, it's also helpful and educational for someone else. And I service the whole state of Texas. I service the whole state of Florida. And who better to choose to do your friends, your families, your co-workers' loan than it's your girl, #JLoan, coming at you with some information and helpful tips. So I don't see anyone else on here with any questions. You guys are always so quiet on here. If I can help you with anything, please reach out to me, TheJLoan@gmail.com. Also, you can inbox me here on Facebook or just call me. I'd love to talk to you. 817-601-5456. Now it's your turn. Click like, click share, and if I can help you with anything, I am so excited to do so. So have a blessed rest of your Wednesday. Be safe on the roads here in Texas. And my Florida peeps, if I can ever help you, please let me know. Talk to you soon, okay? Bye-bye.